Are you struggling to find those best supply and demand zones to trade from? Well, if you are, then do not worry, because I'm going to solve that here today as we go through how to identify those best zones to trade from. So I'm on the EURUSD pair on a daily time frame. I'm going to demonstrate to you how applying the best zones, you can still look to take those trades and get great risk to rewards out of your trades without even trading off the daily time frame. So let me demonstrate exactly what I mean in this video. And you need to watch this all the way to the end so you understand the exact procedure we use when we're looking to trade off these zones. So the easiest way to identify the best zone to trade from is understanding where the market is creating that imbalance, where we're seeing that momentum move in the market. Now here on this chart, you can identify these blue candles are demonstrating to you the momentum move. So from this low in the market right here, we can see the strong push here to the upside. And the same over here, we have this push up and a small pause, then a nice push to the upside. So this area here and this area here are great areas of demand. Now, what about if we look here to the right, we can see this push up. We have a nice push to downside, leaving another area of a strong momentum push to downside, leaving this area of supply. And again, even from this area here, we see this nice candlestick formation. We then have a nice drop to downside, leaving another area here of supply. And if we look overhead to the far left, we can see this move head to the downside, taking this swing low. We have a nice strong momentum move to the upside, leaving down here a nice area of demand. So now we have a good understanding of how we can identify those areas we want to be trading from. We can also add in the line chart. This is going to help you to identify those turning points where we see that momentum. Now you can identify straight away from this low here in the market, we have a strong push to the upside. And exactly the same thing we can see here, and you can see the same thing here. So if you struggle to see these areas, and if we look to the downside, we can see a nice push here to downside and one here. So like I said, if you're struggling to find these zones to draw and you're not quite sure, pop the line chart on. It's going to help you to quickly identify if it's a good, strong momentum move. This is where those big orders are coming in, where we're seeing this strong move to downside. Now, we're not always going to be looking for an entry off these areas straight away. And we're not going to be looking for an entry off these areas always for a big move. Now, if we quickly go back to the price chart and mark out this area of demand. This is a great area of demand that we have. Now, on this occasion, we can see the market does come back into this area of demand. A nice push into that demand zone and a nice push back out. Now, that's a great trade. But it's not the way we're going to look at taking a trade off these zones. Let me demonstrate with these areas of demand. So we have this nice looking area here of demand. And what we can see is that the market comes in, we push down slowly, a final push up, and we push through. So you're probably sitting there saying, well, that's a losing trade. You can't make any profit out of that. Now that is where you're wrong, and that's where you need to change your thinking process. We're not looking to take a trade off this zone on this time frame. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. We're going to be looking to take a trade on the 15-minute time frame, and I'll show you exactly how you can do that step by step throughout the rest of this video, So keep watching to find out exactly how you take those entries. Again, we'll mark out this area of demand. And on this occasion, we're having a bounce off this demand zone right here. And again here to the upside. And look at the big move up here. Now, these three candles to the upside might not look as strong as this move, but on a lower time frame, think of the risk to reward that you can capture taking a trade down here. So let's have a look at this area first. Okay, this is the first point we push into the market. And then this is the next time here we push in. First, we'll go down to a 1 hour time frame. This is the sequence we now do. We first go down to the 1 hour time frame. And we're going to use what I call my reversal out strategy. So we need to draw now a reversal out. So we push down into this area. Now, firstly, what you need to understand here is what we just went through. Doesn't this look like a nice area of supply? A nice push to downside? So what would you expect to happen here? One, we can draw out this area of supply. And we'd expect to see a reaction, okay, off this zone. Because, again, if we quickly go to the line chart, look at the big push down. We can demonstrate that just by seeing those candlesticks. So if we're looking for an entry to the upside out of this bigger zone, we're not expecting for the market to take out this zone, perhaps to sell off this zone. So that means if we're looking for any buys here, we can look to take our buys up to this area of supply. Now, the way we look for a reversal out is we mark off this as a reversal. You can see the market pushes down, pushes back up. Okay, we come back to retest this level. And it's right here we can start looking for our entry to go long to this area of supply. Now, there was another push down here as well. But looking at that, I would have said there's probably not an entry here unless you're looking to trade off a 1 minute time frame. But we now pop down here to a 15-minute time frame. And you can see this is the sequence we're going through now. We're going through those time frames. So we're looking at that best zone of demand to take a buy off here. Now, I'm not saying we're looking to take a buy off here based on the daily, but based on the lower time frames. But using that quality zone we've marked out on the daily, we're going to see some kind of reaction and a bounce out. And this is where we can see the first area. Okay, so we bounce here once. We just go closer in. Now remember, when we're taking trades, many of you do not allow for that stop. Okay, so you need to allow for any movement. So for me, I'll be taking a buy here off based on this candlestick on the first test of this level. I'll be placing the stop with plenty of room below. Okay, we need a good bit of space below that area. Now, I'm not saying that I wouldn't have been stopped out on this trade. I could well have been stopped out. Now, the target would have been at this area here. And we've got over a 6-to-1 risk to reward. Now, let's say I got stopped out on this trade. Then I would have taken an entry based on this push down on this candlestick. Okay, because this low never took out this low. Then on that close would have been an entry again for me. Understanding, looking at the market. And we've just reduced it just under 5-to-1 risk to reward, 4.5 there. So we've gone from that 6 down to that, but it's still a great trade. And if you've lost a 1% on that trade, you've made over 4% profit on that trade. Or if you're using a 2% risk, whatever risk you're using, you understand the process here. And that's simply how we do it. Now on this area, as I said, there's no entry. Big wick down here. It's probably a news pushing down, taking this swing low before we push back up again. And you understand as well now that this area of supply was a good zone to look for a trade out of. And it's all about identifying now where the market's pushing down to. So we already know that the market's coming out of this supply. We know it's going to go back down to this demand. Okay, and if we're looking for a good zone here, where's your good zone on this time frame? Well, this is the push down. Okay, from this area of supply, we push down. Where does the market come back into? And this is how you start to understand supply and demand. We just about test that zone. Okay, if we were using it off the full candle, that bullish candle, we've tested that zone and we've dropped back into the area of demand. And you can do the same thing we went through in a 1 hour time frame here, and you could look for that reversal. Okay, he's looking for that reversal to downside, retest here, we continue down, take out this low. And you know, it's a simple procedure once you understand where those best zones sit. Again, we can go to a line chart, you can see that the big push down. That's how we look for those zones. But let's go back again to the 1 hour once again. Let's quickly find that area. Now this is where we see the market, okay, pushed into this area of supply. And we eventually came lower. So we can see the market pushes lower and then we push back up. So if we're looking at the market here, where do you see that area of supply? Well, this to me is a nice push down. Okay, this move here to downside, leaving another area of supply. So we're starting to see that the supply zones are in control. Now we could easily use this as our zone. But we also have a nice push up into that supply. The market comes down. And this is where you can start looking for those reversals. You can see this is your first test. Even that candlestick on its own, okay, that bullish candlestick is an entry. Understanding those candlesticks with the way the market pushes down with those wicks, taking the previous candle's low, okay, and I would actually target this swing high most probably into this area here of supply. So just over 2 to 1 risk to reward. Not the best risk to reward, but remember we're on a 1 hour time frame here. What about if we did the same thing, went down to that 15-minute again? And that's the whole point of understanding using the lower time frames with this type of strategy. Now we're still buying out of this area of demand on the daily because, to be honest, we're still expecting a bounce out of this area and continuation high. Now we get that here eventually. But if we look at this move here in the market, where we've taken this entry off here, let's now look at where we would have taken entry on a 15-minute. We would have taken it, okay, let's remove that, either off this push up here. Okay, now remember that it was about 2 to 1 risk to reward before. To that area of supply, about the same thing, 2 to 1. Or you see this push back down in to test this level, and that's a perfect pin bar at that swing low. And we create over 5 to 1 risk to reward on that trade. Now that is how you can use those best supply and demand zones to your advantage, trading those lower time frames. Let's look at one more example. Let's go back to the 1 hour again. So you really understand this method. Now it's just the opposite when we're looking for sales out of those areas of supply. And if we look at when the market comes down, okay, so we push down here. We have a nice push down here in the market, leaving this area here of supply. Okay, so we could even use the full candle if you wish, say that was your zone, or you could even just use the, the bullish candle itself. Now, when the market does come back deeper in here, we have a reversal, okay, level right here. Where does the market come back to retest? Okay, and again, we'd be looking at an entry. We go to a 15-minute time frame here. And you basically continue to do this, looking for these types of trades until this zone is broken, which it is down here. Right, let's go closer in. So when we see this pullback to retest this level, okay, the market comes up, comes back, wicks through, okay, and then eventually we get a bullish close up. So if you're waiting for that reaction, we have a higher low, could have taken entry here, target the area of supply, and nearly 4 to 1 risk to reward. Now, this is not hard for you to look to take these types of trades. We know that the 1 hour continues to be bearish here. And yes, you could also look for the sells down, but remember you're selling inside a larger, higher time frame area of demand, and you're more likely to potentially take a losing trade. It's not always we're going to see these supply zones come into play. Now you can see that eventually the market comes back into this area of supply that we draw on the 1 hour time frame, retest it, and then we actually break and we go higher. Okay, we even take out this zone we had drawn as well, and we went above. So if we now go back to the 1 hour, this is where we can see that momentum move back to the upside. Okay, so this is where we can see the markets removing these zones. But then we leave this new area of supply on that big drop to downside. But we're not looking to sell, remember, we're looking to buy out of this higher time frame. And that's where you're going to be able to make those profits in the market. One final push down. Now, I'm not going to either supply I can draw here, but I can leave this zone that we've got drawn here. We have another push down and a reversal. So the market never comes back to retest this level on this occasion. And we push back up and take that zone. But we've already taken some great trades here on the way down. These 3 trades all worked out really well. And that's how you can look at taking these types of entries. One final quick look here. If we go back to this zone and we see the market coming down into this area, okay, and we make a reversal right here, okay, but we come back and we push through that zone, we have to really wait and see for the market to come back to retest it. So if we're going lower time frames here, we have to see what happens at this level. Now for a target, looking at this move to downside, this is a great looking area of supply for me. If we go to the line chart quickly, you can see the big push to downside comes from this area. And that's how we can start marking out those areas, okay, of supply on the 1 hour again. So a nice zone of supply. So what do you expect that to be? That would be a great area to target. Now you can see the market, in fact, came up to this area of supply. We had the reaction. We pushed back down into this area, made this double low, and then reversed all the way back up. But it's understanding that this was the supply zone, which was going to create that reaction from that move down. Now, if we go back to a 15-minute chart here, and we just look at what this could have potentially given you. Okay, you need to go away, test this for yourself. Okay, see how it works. So we come back in, and then this candlestick here shows me the market is going to continue higher. So that would have been my entry off that candlestick there. Okay, stop down here somewhere. Profit target would have been this level up here. So again, just over 2-to-1 risk to reward. Now they're not large risk to rewards, but sometimes you're going to find you're going to capture a trade with a nice big risk to reward. Now, if you understand the way the markets are moving, you can also identify down here, okay, we make a manipulation, and that for me would have been another trade entry. Understanding this is a good entry to take a trade from. Now, I could have looked at taking my first profit target at this high, over 2-to-1 risk to reward, and holding it up to this level, which is now over 6-to-1 risk to reward. Now, why is this a good trade? Because we can see this creates a manipulation. And why is this a good area to look to potentially target? Because you can see the way the market actually, where's my arrow quickly, creates this move down. Now, often these pullbacks, what create a manipulation, are very often taken out very quickly. Now, the area you'd see taken out would be this high here, which we do. But that is a completely different type of trading, a different way to look at the markets. Now, if you want to learn more on how we look at using a 2-time frame approach with supply and demand, I do suggest checking out the link coming up right now.